Hey guys, Sherpa here. Sherpa's here with the Sherpa lesson. Don't forget, just real quick, January 12th, 2022, professional portfolios. They bought in yesterday at the bottom of the market. We absolutely nailed the timing and we're going to continue. If you haven't bought one of my portfolios, go buy one. We're going to kill the market again. Last year, we were up at somewhere, final results haven't come in, somewhere in the 42.5% range is what we're looking at. We bought everything in 18 positions out of the 20, except for crypto. We're trading X crypto. We'll be back in there soon. But that's not the point of today. The point of today's lesson is we're going to do a Sherpa's lesson, the world famous, the world renowned, the regionally known, the Substack Sherpa's lesson. This is going to be for my subscribers only. So let's go take a look. I want to tell you guys just off the top of my head, we know energy, we know banks, right? Well, we're going to take a look at a couple banks and a couple energy positions. And I'm actually going to use my Active Trader Pro to do this. But the most important thing, we're just going to roll through the Sherpa's lesson. This is how to use VWAP. We've done moving averages. We've done RSI, which is my favorite. We've done top down, explaining how top down works. We've also talked about MACD, right? We've also talked about golden crosses and death crosses. We're going to move on and talk about VWAP. I don't personally use these, but I think it's important that you should know how it works. And I'll show you how you can use it. So I'm going to share my screen here. The screen share might be a little bit weird because I have to do it directly from my actual screen itself. Let's see what it looks like. All right, cool. Let's see if I can get it bigger. All right, that's better. Okay. We're going to go to my Active Trader Pro, which is here. You guys are watching me. So today the market is up. We've got Dow Jones is down a little bit. We got the NASDAQ up a little bit, but we've got some serious winners and some serious positions. Let's take a look at CPE. This is the one that I bought a couple weeks ago, actually a couple days ago, that is, and told you guys too. So we got CPE. Inside of here, I have my chart set to a couple things. Now, remember in Active Trader Pro, I can take a look at the 6 month. It's down here. I can take a look at the 3 month. I can take a look at the frequency on these. So I can look at it every 30 minutes over the last 6 months. This chart's going to be busy. See what we got there. So when we're using VWAP, I want to show you that we're using, I like to use 5 days when I'm looking at VWAP. All right. And let me pull up my Sherpa's lesson pages here. Remember, these are going to be available to all my Substack subscribers in downloadable form. And we have, here we go, VWAP, Sherpa's lesson. So Sherpa's lesson, technical analysis. VWAP is the volume weighted price average. Okay, how's that different than RSI? Very different. I'm going to explain to you real quick, but I want to use an analogy here. And this is just a true, honest, real life. One of my buddies, AB, works for Ladenburg Thalem. At least he used to. Ladenburg is a equity trader, right? Their job is to be an investment bank. Their job is that when Fidelity comes to them and says, we're going to put $200 million into Goldman Sachs today, he says, I'll give it to you at this price. And then he goes out and he starts sprinkling trades in throughout the day, such as not to move the market too much with his big $200 million trade, and also to get a better price than what he sold it to them for throughout the day in the contract. That's all profit to him. That's how stockbrokers work, okay? That's what a real stockbroker, a real investment analyst, investment company does. Ladenburg's one of them. RBC's one of them. There's thousands and thousands and thousands of them, right? But they use VWAP. And I'm going to show you kind of how VWAP relates to that and how you can use it in your trading. So lesson number 4, the Sherpa's lesson number 4 here, technical analysis. Follow the money, Lebowski. One of the best movies ever. Had to put that in here to keep my personal spin on it. So what is the volume weighted price average? It's a trading benchmark used that traders, gives them an average price of a security trading throughout the day based on both volume and price. Quick example, if I made 2 trades in a day, if a stock only made 2 trades in a day and the first trade was at 10 and the second was at 50, and the second rather was at 20, what would the average be? 2 divided by 1, 10 divided by 15, the difference too. So we would come out at a $15 average, right? But what if the first trade was for 10 shares and then the next trade at 20? So the 10 shares at $10 and then the next trade at $20, let's say, was a million shares, right? Well, that average doesn't mean diddly squat. I need to know the weight of it. So that's what this is. This is the volume weighted average price. In finance, it's a ratio of the value of a security traded, the total number of transactions during a trading session, and it's measured by the average formula below. And so we have basically how many shares traded times how many shares traded over the difference in the share price over the same period of time is what we're looking at. That's what these Q's and P's and J's mean. So literally, the Sherpa's here to tell you, don't overthink it. It's just the average. You're telling me it's just the average of time and price over a period. Yes, but what matters is that period. So if I'm looking at a day, but I'm looking at it on 15 minutes and I'm trying to get in, I need to know what the average has been throughout the day so that if the price is below that average, and I'm going to show you here on my Active Trader Pro here in a second, that's the better time to buy. You don't want to get screwed by buying on the wrong end of the market, right? Going back to my story, how is this used for institutional brokers? Typically, it's an indicator computed for a period of 1 day, but it can be measured between any points in time. That's what I'm going to show you. It's also used in algorithmic trading. So instead of having to have my buddy at Ladenburg figure this out, they have computers that do this, right? The main thing here is that they try to work in market orders to earn traders commissions. Same thing like I mentioned before for the P&L, the profit and loss. How well is the broker doing at sprinkling in trades? Well, if you could get your trade in right before the broker, would that be something that interests you? I think it would be. This is called guaranteed VWAP execution. Brokers can always trade in the best effort way and answer the client to the realized price. This is called a VWAP targeted execution. It disperses more in the answer price compared to the VWAP for the client. So you know that the guy that's paying you to sprinkle in his trades and to make you money for him, maybe you sell it to him at the VWAP and you try to do better than that, right? I'll give you 1,000 shares of Apple at $120, but you could sprinkle them in for 119 throughout the day. You get to keep that one, right? And then that 120 can even be, in this case, the algorithms do it based on how you do well versus the VWAP. So this is a lot of inside baseball. This is a lot of behind the scenes, but this is how it relates to you. Volume weighted average price appears on a single line through intraday charts, 1 minute, 15 minutes, and so on. And it looks very similar to a moving average. Retail and professional traders use it as a part of trading rules. So how is it used by traders, guys? Why is the Sherpa sitting here in this beautiful day in Austin and teaching you about this? You can use it to attempt to front run positions in institutions, big money institutions like funds and pensions. What I always tell you guys about, right? Don't try to steer the Titanic, just try to be in front of it. Institutional buyers and algorithms use VWAP to plan entries in large positions. So let's say that Vanguard gets its big institutional deposit on January 18th for the first full week of trading, the full week of investing for all the 401ks in the world, right? Well, Vanguard is just going to throw that money in there based on the computer, but let's pretend it was Morgan Stanley, or it was the Yakman Fund, or it was Wasatch, or it was Fidelity, or it was the Contra Fund, for example. They go, okay, we're going to take a big position and we're going to make a position to start off our new year, just like my professional portfolios are starting off their new year, and we're going to buy blank stock. Well, you don't just buy it at the open. You don't just buy it at the closing. You don't even necessarily just buy it over a couple days. But if you can see that the line that I'm going to show you here on the chart is the average throughout the day based on volume and price is underneath. So I'll show you in a second. It's going to be underneath based on the candlestick. You can go ahead and put yours in there. And if you get it in front of Fidelity, in front of Morgan Stanley, in front of Yakman, in front of Wasatch, in front of all these firms out there that are doing this, you're going to get a better price throughout the day than they are. So that's how we do this. Intraday trading on VWAP is used, might be as simple as buying the first closing price above VWAP as an entry. Great example. Or selling at a predetermined point above it. So when we're getting out of positions, we can use VWAP as well, right? More often than not, these strategies are for trading for a hold for a bit. And I put that in here too. And then you can use this in conjunction with Bollinger Bands. This is how I would use it. This is how I may even use it today. These are a set of trend lines plotted, 2 standard deviations, positively or negatively above the SMA. You know what an SMA is because I taught you. Go subscribe to the Substack, baby. If a security's price, we don't even have to worry about that. So traders may use VWAP as a signal and then exit the trade based on Bollinger Bands. That's what I do. I do use this, and that's something that I put in here. And I screenshotted this for everybody that's going to go subscribe to my Substack and then download this downloadable format. Just put this in your trading book so you remember. But I was excited to get this out there because this is a day that I'm actually going to be buying in, and I have been buying in. So let me just go to Active Trader Pro. I hadn't really thought this out too much, but what I want to do here is I have CPA and I love CPE, but not to be too braggadocious. Let's look at another stock I did today and that I really love, and let's see how it looks. And let's take a look together at what we can do. So this says weighted moving average. It doesn't say VWAP, by the way. These are the exact same thing. For all intents and purposes, there's some weird math. There's a tiny bit of math in there, but if you're on Fidelity Active Trader Pro, WMA is the same thing as VWAP. Okay. So what I'm going to do here is I have a ton of different charts all loaded up and they're behind this. But right now, let me get rid of this daily dashboard if I can. No, screw it. We're going to go frequency here. I want to go 15 minutes. And I want to look at the VWAP over the last 5, let's say 2 days. Because remember, the market took a nasty you know what on us. And during that period of time, we weren't invested, and now we're investing. We don't really care about what it used to be. We care about what it is now. So not a ton of volume here. But when we look at the blue line, so the blue line here is going to be the variable weighted average price. And and then obviously we got the candlesticks. Green day up, opened here, went down, and then went up, and then finished almost where it was. So if I'm looking at it on today's date, this may not be the best example because the price didn't move a ton, but I can put my cursor on it, and then I can look over here and see what the highs and lows for the day are. And I want to just try to get in below this blue line. I'm not going to buy anything right now because there's not enough discernment, but let's just look back and pretend that this was let's pretend that this was this day. Let's pretend, or not even day. These are times of trading, right? These are 15-minute periods. So if I wanted to get in this nearer the open of today, so when the stock opened today, we can go, all right, the stock opened, it moved up over that 15 minutes all the way from $48, $48.80-ish up to $49.45-ish. And then over that 15-minute period, it then came back down to, we're going to look over here, and that number where it says close over that 15 period was 49.15, right? Now the volume weighted average price is underneath that. So if I buy here, that means I'm probably not getting the best price that I'll get throughout the day. I wait the next 15 minutes, right? This is the next 15-minute period that I'm looking at here. And it even says it up in my corner. It says 10 a.m. Which was 9 Central Time for me. That's the way I have to think about it. But at 10 a.m., we got then that period obviously already opens at where it was before. It went even higher. So I'm already thinking now, all right, the market direction is moving up and I want to buy this stock. What do I always tell y'all? Wait till about an hour and a half, an hour, 15 minutes after trading opens. And then we get 1, 2, 3, 4 downs. So looking back at this, when would the best time to have bought this be? It would have been right here, right? And I would have known it because now these aren't going to happen exactly in real time, but they will look a little bit different on your chart. They'll look a lot more similar to this piece here. So in real time, had I looked back and I would have said, look, man, I could have got a tick right here. I could have got a tick at 48.80, and we've already been up to as high as 50.20. And I'm below where the VWAP is trending. That's a good time to have bought this. Conversely, when I go back and I do my trading notes at the end of the day, what can I do there, guys? I can go back and go, man, I ended up buying it. Let's say I buy it now. I ended up buying it at 49.40. My hypothesis is the same. Shoot, I made a video about this 2 days ago telling you guys that I was bullish on the market. I will give this away. This is one of the holdings of my professional portfolios. You're welcome. If you're tailing out there, just help yourself and go buy it. It's $100 on my website. But this is the time that I should buy next time. So what can I do? I can write down in my trading journal, that's at 10:15, right? Is that what that says? No, that's at 11:15 Eastern, 10:15 my time. So I know that that's not necessarily what you wanted to hear from a tutorial, but this is how I use it. This is how a real professional trader uses this type of stuff. I'm making this for you. This is my passion and the love of my life. This is exactly what I do. Remember that I have my website below, everbullish.com. We're selling portfolios. They're $100. You got three different allocations, and then a fourth for a mutual fund portfolio. I beat the market every year I've been doing this. I'm no longer a financial planner, but I have been one of the biggest and one of the best in a large place in a long time. This is my ode to all investors. The ever bullish mission is to uplift the consciousness of the average investor so as to get away from the bullshit, diluted, whack trading principles that they use, particularly modern portfolio theory. They're going to get your money, they're going to take your millions, they're going to put it into a mutual fund, they're going to get their commission, and then they're going to tell you to never sell out of it, even if it's the wrong thing for you, because their boss needs to keep buckets filled, and that's bullshit. I'm Chase at Ever Bullish. I'm the Stock Sherpa on YouTube. This has been a lesson on how to use VWAP. Remember, all of my trading lessons are available on my Substack. It's $20 a month. My average trade is going to net you a larger profit than that, typically more than 200. That's the price of a year. Consider going and getting it. And for all my OG bulls out there, I text you. You can call me. Let's stay in touch and let's beat the living shit out of the market yet again. AFG, LFG, LGR.